everyone, and welcome to day 4 of Paper B7 Study School. On the slide in front of you, you can see where we are right now. So the green shows you what we've covered. Lots of ground has been covered in the last 3 days, primarily focused on auditing areas. Today we will be moving on towards the non-audit and non-assurance areas as well. But before that, there is a really important topic to cover. Some housekeeping before we move on to that. As you are well aware, that for any questions that you would want to ask, there is the question text box that is available, and we have a moderator who will say out the questions loud, and I will be happy to respond to your questions. Meanwhile, if you have any questions coming in from the last 3 days, please feel free to put them down, and I'll be happy to look at them 3-4 minutes from now. Where are we right now, and what are you trying to achieve for the day? So, we've covered the introduction and ethics part. As you can see on the slide, it's tendering, practice management. After which we moved on to the big boy, the big question 1 of section A of your paper, related to audit strategy, risk assessment. Looked at a lot of details of how what are the good techniques to write risks, how we better describe them, and what is the right way to actually put words to risks, and also discuss the so what if. We then moved on to audit procedures. Yesterday we did a very quick recap of most of the major financial reporting standards that are tested as part of paper E7, and we covered some of the auditing aspects around it. Also, we discovered the difference between matters to consider and evidence expected to be found, or procedures versus evidence expected to be found, which was also explained by way of how it is different in terms of a verb versus nouns. There was some talk about reports, but this will be covered today, right now, and after that we will move to key audit matters. Key audit matters is a new standard, the revised new standard IEC 701, which also led to revisions in the other standards, including IEC 700. So IEC 700 would be written as 700 R's, which means 700 revised, where 701 is written like this, although of course it is a new standard. So the 701 standard, which relates to the key audit matters, is something that we will be covering today. That will be the last area that we will be doing as part of assurance, particularly statutory audit or external audit as a whole. And then we move on to some of the non-audit areas, some of which is assurance, some of which is non-assurance as well. So we will look at reviews, in particular due diligence reviews, and we will also be doing a question on due diligence. Internal audit and outsourcing, something which is happening, really common in the world today, and something that was somewhat of a sleepy kind of topic, was not being examined in C7, but all of a sudden in the last 1 year you saw a little bit of questions around that particular area, especially outsourcing. And a part of that question actually was coming in as part of question 1 in section A. So we will look at that as well in detail. And then a very important topic, which is basically the combination of 4 subtopics: social, environmental, public sector, and performance information auditing. So we look at each one of these in detail, what does it entail, and what are the key exam technique points with regard to these areas. Also, it will be important to understand what is the difference between social, environmental, public sector, and performance information auditing. And then we'll have the last day tomorrow as far as the syllabus coverage is concerned, before we move on to the exam practice on Saturday. For tomorrow, we've got some important topics too, which is prospective financial information, forensic accounting, and the current issues that are likely to be examined in the paper. Right, so let's look at if we have some questions.
Just one question from Kiran. An audit report with unmodified opinion having other matter paragraph or emphasis matter is called an unqualified report or a modified report?
Okay, that is a very good question, and I want you to discuss this in fact today after the auditing part, but let's have a look at it right now. Look, there are modifications. So there is one aspect whereby you say that an audit report is modified, and within that report there is the opinion. So if you are giving anything that is in addition to the standard audit reports which have been prescribed by the standards, so let's say by that account, you even put in one small line over there describing something in addition to what is in the standard, that would be deemed as a modification of the report itself. And this would be, for example, where the local law or the local national constitution says that you have to enter some information about a certain aspect. So, for example, in many of the Islamic countries, you are required, as part of the audit report, the auditor is required to mention whether the correct amount of zakat, which is like an Islamic tax, is deducted and input. And he has to mention, the auditor has to mention that in the auditor's report. So that would be something additional. And sometimes maybe what is covered under what is known as an other paragraph. This does not, however, necessarily mean that the audit opinion has been modified. The opinion will always be modified when the statement that is contained underneath the opinion heading, the title, that changes. And that is the standard statement, which is that in our opinion, the financial statement given to and clear view of the financial position performance. Or, in our opinion, the financial statement presents clearly the financial position performance. Now, if anything is changed in that, so for example, if you add except for in there, so it becomes a qualified opinion. Or if you say that they do not give it to and clear view, in that case, of course, it becomes an adverse opinion. And if you say that we are unable to opine on the opinion, on the financial statement, then that is the case where it becomes a disclaimer. Right? So that is the subcategories which you could say as part of the audit opinion. Now, what happens with emphasis of matter paragraphs and other matter paragraphs? Well, emphasis of matter paragraphs and other matter paragraphs are basically a modification of the audit report, but not a modification of the audit opinion. So wherever you are giving an emphasis of matter paragraph, which is to say that you are emphasizing on a certain matter within the financial statement that has to do, or it is another matter paragraph, that is to say, other general information. But that does not necessarily mean that the card has actually been modified. Although theoretically, even if you make a small, tiny, minute change in the card,
your audio is gone for some reason. Students can't hear you.
Okay. Let's put ourselves off over here.
Can you ask them to say it here?
If anybody cannot hear me now, could you please put that in the question text box? There were some concerns about the voice not being clear enough. If you can hear me right now, then I think we're fine and I can proceed. You just want to check.
They can hear you. So can you repeat last?
Okay, I'll just repeat what I said because some people were unable to hear my last sentence. So when I'm giving the example of a car, and in a car, so for example, if you change the headlights of the car or you change the music system of the car, technically there has been a modification in the car because something that was originally built into the car has been replaced by something new. But you would not really say that the experience of driving that car has actually changed because the engine is the same, the drive is the same. What would cause you to actually say that you had a substantial modification of the car? That is when you would have probably overhauled the engine in itself, right? And that would lead to a different drive experience altogether. So that is just how you can compare this in the audit report and the audit opinion modification. So whenever you are saying that I put in an emphasis matter paragraph or another matter paragraph or some other line or something that is required by local law, for example, I have actually modified the audit report, but not modified my audit opinion. However, wherever I am giving the qualified opinion, which is the except for opinion, or the adverse opinion, in which case I am saying that finance is not given to us fair view, or I am saying that this is the disclaimer opinion, which is basically I'm trying to say that I am unable to opine on the financial statements because I do not have sufficient appropriate audit evidence. Those are the cases that will be classified as a modification of the audit opinion. And of course, that would also mean that that is a modification of the audit report. So, opinion is that paragraph within the audit report. An audit report is the counter word for the page or pages that contain the audit report. That also includes the opinion and others. Hope that helps. Right. So, we will now move on to our key topic. And as you can see on the screen in front of you, which is audit reports. I just want to check if there is any more questions, other questions that we have to respond to.
Yes, there's a question from Abdullah. What is the difference between audit evidence and audit procedure?
Okay, so that's a good one, and we can describe that in detail again. The difference between audit procedure and audit evidence. As I said, that when you are doing something, performing something, so that is basically a verb in terms of the English language. So you are basically doing or performing something. So that is basically performance of a procedure. On the other hand, what you get after having performed this procedure and what you put in your file, that is what is the evidence, and that is usually a noun. So that would be what you have in the file, and that is evidence. So, in other words, what is in the file? And that file could be your hard copy file or your soft file, because there are audit software also that are available these days. So, for example, now, it's important to give an example here. If I say that I want to do a physical inspection of inventory. So the process of carrying out the physical inspection of inventory, whereby I'm looking at things, 1, 2, 3, 4, and I'm counting them. Doing this particular task would classify as a procedure. However, the physically counted stock, or written on a piece of paper and verified by me and signed by me. Now that piece of paper is basically the evidence that is going to go in my file. So what is in the file? In the file is not the procedure. In the file it is the evidence. In the file it is that paper that says that I verified 1, 2, 3, 4, 5 items. And the quantity have been listed and I signed off. So that will be the evidence. So the key difference between the procedure and the evidence, of course, would result in that the procedure is being carried out, and as a result of that procedure, what you're getting is the audit evidence. Any other questions?
Yes. What's the difference between modification of opinion and qualification of report?
Modification and qualification. So I just dropped that off. So within the audit opinion, modified category is the qualified opinion. But this does not mean that a qualified opinion is the only type of modified opinion, because an reverse opinion is also one type of modified opinion. And similarly, a disclaimer of opinion is also one type of modified opinion. So within modified opinion, you have 3 categories. Qualified, in which you say except for XYZ, financial is going to favor you. Adverse, in which you say that financial is not favor you in favor. And number 3, disclaimer, in which you say that you are unable to opine on the financials because you do not have sufficient appropriate evidence. So, to summarize this, the qualified audit report, or the opinion, is a type of a modified audit opinion. And there are also other types available. Right. So we're done with the questions for now. Let's move on to audit reports. Now, what are the key standards with regard to audit reports? That is something that you can see on the slide in front of you. And as you can see, ICCA 700 revised. The name is quite long. The independent auditor's report on a complete set of general purpose financial statements. This, as I said, has been revised, so you put in ICCA 700 bracket R, bracket close, which is the revised version of the ICCA. You then have ICCA 701, which is communicating key audit matters in the independent auditor's report. This is the new standard that we will be looking at shortly. And then there are the modification standards. One is related to modification to the opinion in the independent auditor's report. And note the word. The word that has been used in the title of ICCA 705 is modification to the opinion in the independent auditor's report. So basically it is within ICCA 705 that modification of the opinion actually takes place, which obviously means also modification of the report. However, ICCA 706, as you can see on the slide, is emphasis of matter paragraph and other matter paragraph in the independent auditor's report. This is where the opinion is not modified. However, the report structure has been modified. So anything that happens as a result of the standard report given in ICCA 700 being breached or being taken off or being changed for some reason would result in and not necessarily the opinion. Right. Now, IAC 700, the independent auditor's report on complete set of general purpose financial statements. What has changed in the new standard? What is new? Well, in fact, in one way, nothing has actually remained the same, and everything has changed. However, in a way also, the opinion that is being given is of course the same. So there is some general alignment changes and placement changes with regard to the audit report. So basically, let's have this off. Just a minute. Yeah. So in IAC 700, basically the independent auditor's report on a complete set of general purpose financial statements. The new audit report format is something that we look at. So let's see what was there in the old format, and then we will move on and see what has happened in the new format. So in the old format, what did you used to have? You used to have, first of all, an introduction paragraph. And this was basically saying that we have audited the financial statements of ABC company, which comprise the statement of financial position and the statement of financial performance and cash flow statement and change in equity for the year ending XYZ. And this was basically introducing to the shareholders that what have you actually done. Then you talked about what was the management responsibility. So there was a management responsibility paragraph, in which you talked about the fact
of these financial statements is the responsibility of the management, and that also includes having the proper accounting policies and classification of items within the financial statements. After which you moved on to the auditor's responsibility paragraph. And the auditor would then have 3 paragraphs in there, 3 sub-paragraphs, in which firstly the auditor would say that my responsibility with regard to the audit was to basically provide an opinion on whether the financial statements give a true and fair view or not. And also, can I see this one? And also, the second paragraph within the auditor's responsibility paragraph basically meant that what are the procedures that the auditor is actually adopting. And then there was a third paragraph within the auditor's responsibility paragraph that related to that the auditor believed that he had gained sufficient appropriate audit evidence on which to base his audit opinion. And then came either the basis for a qualified, adverse, or disclaimer or opinion paragraph, or there would be no such paragraph because there has been no qualified, adverse, or disclaimer opinion, which was usually followed by the opinion paragraph. So basically, if you wanted to see what is the opinion in the audit report, you would actually go right at the bottom of the audit report to find out what is the opinion on the financial statement. And then there would be 3 standard things: the auditor's signature, auditor's date, or the auditor's address on which the auditor has signed the audit report on the financial statements. So you have the sign, the date, and the address of the audit. This is what you used to see in the old IAC 700. This is no longer obviously going to be examinable. The reason for that is basically that it has been replaced by IAC 700 revised. Now what has happened in the new? In the new paragraph, in the new report that has been prescribed by IAC 700, the first thing that you will see is that the audit opinion is on top, and that you can also see in the slides in front of you. So it starts off with the audit opinion. And then if you have basically issued a qualified or adverse or disclaimer opinion, so basically it talks about that, why that has been done. So there would be a paragraph on basis for qualified, adverse, or disclaimer. So what you usually saw right at the bottom in the old report has actually moved up right on top. And the reason is very simple. The reason is that when you look at the page that contains the audit report, what is the first thing that you want to see? The first thing that you want to see is the opinion. So that has to be placed first. Right? Then there are also other matters that have been included now. And that includes the key audit matters. Key audit matters. These are usually also known as CAMs. So this is a key change that has happened within the revised IEC 700. And that is basically something that we will now cover as part of IEC 701. So let's have a look at what is a key audit matter and what are the requirements with regard to key audit matters. Do bear in mind that the name of the standard, IEC 701, is communicating key audit matters in the independent auditor's report. As you can see on the slide in front of you, the definition of key audit matter is those matters that, in the auditor's professional judgment, were of most significance in the audit of the financial statements of the current period. Key audit matters are selected from matters communicating with those charged with governance. So basically, there are two things to understand. Number one, key audit matters are basically the auditor's judgment. So it is the auditor's professional judgment of what he or she believed were the key matters of significance in the audit. So those are probably matters that were significant risks, that took the highest amount of time, for example, on the part of the auditor, or that resulted in the highest amount of audit risk for the auditor. Now those could relate to, well, high inherent risks, significant control deficiencies, or problems associated with something that leads to a higher detection risk. Now, anything that leads to high audit risk will be an audit matter, and of course, that may be considered for inclusion within this category. However, a key audit matter, a CAM, would only be that audit matter which, in the auditor's professional judgment, is of such significance that it is important that the auditor highlights that to the shareholders, so that they know that as part of all the time that has been spent in the audit, where were the major chunks of that time spent, and where were the highest risks, according to the professional judgment of the auditor. So it is important to note here that the auditor, when reporting, is not actually looking at the shareholder's perspective or the management's perspective of what they believe are the key audit matters. And this is very different from the concept of materiality. Materiality, when the auditor is calculating materiality, that is being done with the perspective of the shareholders, right? And hence, what happens is that the auditor looks at the financial statements and then he or she say that which number or amount or quantity or quantum or item is of such significance that the variance of that amount would result in the decision of the shareholders being impacted. And that is how auditor used to calculate materiality. However, when we come to the key audit matter, this perspective of the shareholder is not taken into account per se. Rather, the auditor says, what in my personal professional judgment were the key audit matters that were the significant risks and took a significant amount of time to resolve. Now, is a key audit matter an unresolved matter? The answer is no. A key audit matter is a resolved matter. A key audit matter is a closed matter. It is something about which the auditor raised a concern, but then the auditor also addressed that concern. And that concern was addressed by performing additional procedures. Those could be additional control testing procedures or additional substantive procedures. So a key audit matter is not basically a substitute for a modification of the audit opinion. Now, what does this basically mean? This basically means that if you go to an audit and you figure out that inventory has not been accounted for appropriately, and that results in a significant disagreement with the management, so what would happen? The auditor would usually qualify the audit opinion in that particular case. So let's say that the auditor believes that inventory should be recorded at $100. However, management's point of view is that inventory should be recorded at $150. Now, what is the problem here? The problem is that the auditor believes that inventory should be kept at $100. And there is a difference, and therefore there is an overstatement on the part of the management as per the auditor's judgment. Now, where should this go? Is this a key audit matter? Or is this something that would result in a modification? So, it could be a qualified or adverse opinion. Put your response in the question text box. I'll repeat the question. As per the auditor, inventory should be valued at 100. This is the auditor's judgment. Management's judgment is that inventory should be carried at 150. Auditor has performed all the procedures and satisfied himself or herself that the value can be no more than 100. But the management is insisting and they have recorded the inventory at the value of 150. Now it's the time for the audit report. Where do you want to put it? Is this a key audit matter or something that would result in modification? I'll give you 1 minute to think about it and put your response in the question text box.
It's not KAM. Modification. If matter is resolved after discussion, then it should be KAM. If it remains unsolved, then it would be modified. If not resolved, then modified. If it is resolved, then KAM. Both. And then qualified or adverse. And there's a no because it's unresolved matter.
Okay. So, well, most of the responses that we got actually say that no, this is not a KAM, this is not a key audit matter. And that response is correct. The reason for this is that you have performed the audit, you've executed the audit, you've done all your procedures, and now you're saying that as per my judgment, the inventory should be valued at 100 because it cannot have a value more than 100. No matter what you try to do, you cannot have a net realizable value of higher than 100. This is based on the procedures that you have already carried out, and you are now at the final stage of the audit. Management insists that this should be 150. Now, this is a difference of opinion, or a disagreement, as you may call it, on accounting matters or accounting policies. So, as you can see on the slide as well, if the matter results in a modification as per IEC 705, no CAM. There will be no CAM. Why? Because a key audit matter is a resolved matter. It is a closed matter. And hence it cannot be a matter that is unresolved. And the example that I had here basically showed that this was a difference that was continued. And considering that this was material, the 50 difference, I would modify my audit report and opinion. And of course, there will be no key audit matter with regard to this particular area. Now, what would happen in another case? I believe that there is an inventory in the balance sheet, and I have verified that particular inventory, and that is 100. However, there is a risk that that inventory could be overstated. Now, as that risk arose from what we covered in IEC 315, that risk has now been resolved. The reason for this is that I have physically inspected the inventory. I have performed a confirmation for any inventory held with third parties. I have actually performed a verification of some of the inventory purchases during the year. I have tested controls around inventory. So basically, I have resolved all my concerns with regard to this inventory. However, I believe that it is an item of risk. So, where should it go? In this case now, it would go to the key audit matters. This is a resolved matter and it will go into key audit matters. Now, what do I have to disclose with regard to the key audit matters? What is it that I have to disclose? So basically what I do is that I put in a title within my audit report of key audit matter, and then I put in each of the key audit matters. So key audit matter number 1, and I describe what the key audit matter was and how I resolved it. Then I go to key audit matter number 2, and then I can go about describing that. and so on and so forth. Now, what do I describe in the key audit matter? That is what you see on the slide. So there are three things. You refer to the disclosure in the financial statements. So A is reference to the disclosure. Second, why the matter is a key audit matter. So B, why is it a CAM? And third, how the matter was addressed. How addressed. So in this case, the example that I just gave for inventory, what would I write if this was my key audit matter over here? I would say, as disclosed in note 7, 8, 9, whatever, to the financial statements, inventory is carried at $X in the financial statements. This inventory is, let's say, geographically spread out and contains raw material of many types, work in process, and finished goods. And such inventory is prone to the risk of overstatement. The reason for that is that the nature of the business is such that the inventory is perishable. And of course, it is in the fast-moving consumer products industry. However, there is a possibility that the value at which it is recorded may be higher than what is its net realizable value. So this is what I believe is my reference to the disclosure in the financials, as you see on the slide, and why I believe the matter is a CAM. But now I have to describe the third bullet that you see on the slide. And the third bullet is basically that how the matter was addressed. So I will now have to specify what are the key audit procedures that I adopted so that I could close this list and resolve this key audit matter. So I would have to describe within the same paragraph, or perhaps make a separate sub-paragraph, and try to tell them, the shareholders, the readers of the financial of the audit report, that I performed the following procedures in order to address the above-mentioned risk. And that could be physical inspection of inventory, confirmation of inventory held by third parties. Perhaps I may want to state the extent of verification that I have done, controls testing around inventory movement, making sure that the policy and processes are in place with regard to the movement of inventory, conversion ratios, verification with regard to work in process, and whether the work in process has measured the right state of completion, and so on. I would just mention all the key procedures that I performed with regard to inventory, so that I addressed this particular risk. So those are the key things that are mentioned in the key audit matter. Now let's go back to the definition of the key audit matter. There was also one thing else over there. Key audit matter, the definition on the slide, is those matters that in the auditor's professional judgment were of most significance in the audit of the financials of the current period. Key audit matters are selected from matters communicated with those charged with governance. Yes. So a key audit matter is a matter that has been selected from the many matters that are communicated to those charged with governance. So basically what happened was that the IEC 701, when it came, necessitated certain changes to IEC 260. And IEC 260 is communication of matters with those charged with governance. So if you are to describe something as a key audit matter, that would be selected from amongst the matters that have been reported to those charged with governance. Now these could be the audit committee, the executive committee of the board, or the board of directors, or some other management committee that has actually been charged with governance of the entity. So these are the two important things that are that need to be borne in mind with regard to the definition of key audit matters. So number one is that it is the auditor's professional judgment as to what is the key audit matter. And number two, it is selected from within the matters that have been communicated to those charged with governance. Now, some specific situations about which we may have a concern of whether those matters are or are not to be communicated as key audit matters. Just yesterday, we covered going concern. And I told you that there could be three situations. One is that the company is a going concern, no problems, nothing at all, and you issue a clean opinion. The other is the company is not a going concern, and well, if the management has disclosed that fact, then you would just emphasize that in the instance of matter, and there is nothing else to do. But then, usually, what we see is in the B7 questions actually, is the middle situation, the middle part. Neither can you clearly say that the entity is a going concern, nor can you clearly say, no, the entity is going to close down. So you are in the middle. What do you do there? That is what was known as material uncertainty, and we just covered that yesterday. So whenever there is a material uncertainty, would that classify as a key audit matter? Theoretically, yes, that is a key audit matter, because as an auditor, you want to satisfy yourself that there are no doubts with regard to the entity's ability to continue as a going concern. However, what has happened in the new audit report is that there is a requirement for a separate paragraph that is to be covered under material uncertainty over going concern. And since it is addressed in a separate paragraph, hence there is no need to have a key audit matter paragraph for a material uncertainty. So now there are two exceptions, as we have discussed yet. One, if the matter results in a modification of the audit opinion, if the matter results in a modification of the audit opinion, that matter will not be disclosed under key audit matters, but rather would be in the basis for modification and then the opinion. Number two now is if the matter is related to material uncertainty related to going concern, then also that matter will not be covered under a key audit matter, but would rather be disclosed separately under a new title, material uncertainty or going concern. And that is where the auditor will describe that because of these facts, for example, that the working capital ratio is bad, there are persistent losses, the company is in losses for this year as well, net working capital is negative, revenue has gone down, there is no viable business opportunity with regard to the current business that the entity is doing, and or there has been a loss of a major customer or supplier, and or the product has been bad, whatever the reasons are. And the auditor would describe that and describe the material uncertainty over the going concern. And that would be done in a separate paragraph within the audit report, but not as a key audit matter in the audit report. The next item that you see on the slide is no key audit matters need to state so in the report. Now what does that mean? There can be a situation where the auditor believes that there are no key audit matters. And this would be rare, but this could happen actually. For example, there is a holding company, and underneath that holding company, well, there are other companies. And the other companies' financial statements are being audited, they have their own problems and risks and issues and key audit matters, and those have been described in the report. However, at the holding company level, the only thing that you have is an investment, and there is no significant risk because the entities are profitable, so there is no risk of impairment as well. So on the one hand, you have the cash coming in and being invested into the other entities, and on the other hand, you have the share capital that has been input by the investor of that holding. So there would be no key audit matter in this case because there is no inventory, there is no fixed asset, no receivables, no risk, and nothing at all. And the auditor believes that there is also no significant risk regard to impairment. So the auditor believes that there is no key audit matter. If that is the case, the standard says, IAC 701, that fact needs to be disclosed in the audit report. So the auditor would put in a heading, key audit matters, and then would say that in my professional opinion, there are no key audit matters to report with regard to the audit of the financials for the year ended XYZ. As I said, this would be rare, but there is a possibility that that could happen, and there may be no key audit matters. Lastly, there are also documentation requirements. So whatever is a key audit matter, number one, of course, it has to be communicated with those chartered governance. That would include the audit committee or the executive committee of the board of management, senior management, or the board of directors themselves. And in addition, there are documentation requirements. So you will have to document why you believe a key audit matter is a key audit matter. What is the reason for that? The drafting of the key audit matter is something that is likely to take considerable time. And of course, that is going to result in the audit report becoming much more longer. So those are the key areas with regard to key audit matters. And the other audit report changes that have happened. Now going back to the revised IAC 700 that we were talking about. So that was a little bit on IAC 701, which is the new standard. And now we go back to IAC 700, which is revised. So we have the audit opinion on top. We have the basis of opinion discussed right after the opinion. We have specific assessment regarding going concern, as I just talked about. So the auditor is specifically required to mention, especially in case where there is a material uncertainty with regard to going concern. So the auditor is expected to mention that as well. The key audit matters is the new edition, and of course other information. We just talked about that yesterday when we were covering ISA 720. So when we did ISA 720, which was yesterday, I told you that if there is a material inconsistency between other information and the financial statements, the auditor, as per the revised ISA 720, which should also have the R over here, the auditor is required to communicate that in the audit report that I have read the other information and identified no material inconsistencies or identified the following material inconsistencies. And then, of course, the auditor lists down all those inconsistencies. So that is what this thing refers to on the slide that you can see, the other information. So the auditor puts in a title, a heading of other information, and then he puts in whether there are no material inconsistencies or identifies the material inconsistencies. This would, of course, only be applicable in the case of listed companies. So these are the key changes. And after that, you have the same auditor's responsibility and management's responsibility paragraphs with regard to the audit of financial statements. And then we close the audit report with the signature and, of course, the name of the auditor, the date, and the address of the auditor. Now, to understand what the new audit report has become, I think it's really important that we have a look at the appendix that has been given in the audit report. But before we go there, I would say that there's also a technical article that has been published by the ACCA. So the ACCA technical article with regard to the new audit report, that's available on accglobal.com. So if you go to P7 resources, you will be able to find that technical article. And I strongly recommend that you go through it so as to identify what has happened with regard to the new audit report. I'll take a few questions, but before that, I would want to emphasize that we have to look at the suggested audit report format that is given in the revised standard. So let's spend some time looking around some of the basic requirements of the new standard. So may I suggest you all to go to the handout section and to open the handout, which is titled Proposed ISA 700 Revised, and you will be able to see this on the screen in front of you as well. So the name of the handout is Proposed ISA 700 Revised Final. And this is what you should be able to see. So this is basically the new audit report. There is a box that shows with the background. And now you can see the independent auditor's report and how it is. So it's basically 4 pages long. And this audit report has basically 2 key audit matters. So one is on the valuation of financial instruments and the other is on the revenue recognition related to long-term contracts. I think it's a good idea to give 5 minutes to all of you to go through these 4 pages. Just don't read each and every word, but just at least have a look at the structure of the audit report and figure out how the key audit matter has been drafted, how the new audit report is actually changed, so that it gives you an idea and flavor as that when you are attempting paper P7, you should be aware of where and what type of drafting has to be done. Drafting the audit report is not something that comes up in P7. However, key audit matter, or the fact that something has to be highlighted as a key audit matter, is something that could be tested at the level of P7. In some situations also, perhaps there is a possibility that drafting at least of the key audit matter part of the audit report may be required, or it also may be required that there is a key audit matter that has been given and you are required to comment on the key audit matters. This was just like critical appraisal of the audit report which we used to do in the prior paper P7 attempts. So 5 minutes to go through this document, and then if you have any questions, please feel free to put them in the question text box. 5 minutes. All right. So as you would have seen now, the new audit report, as per the revised IEC 700, is of course very different from what you were used to seeing as part of the previous IEC 700. And as you can see in front of the screen in front of you, that first of all you have the opinion paragraph as was discussed and stated. You then have the basis for the opinion, and if that is of course qualified, adverse or disclaimer, so you would describe why that opinion was qualified, adverse or disclaimer. You then have the key audit matters, and those basically include, first of all, an introduction into what is a key audit matter, so that the readers, the shareholders understand what is basically a key audit matter and in whose judgment it is supposed to be classified as key audit matter. Then you have a heading for each of the key audit matters, and in this case you had two. So you had valuation of financial instruments and revenue recognition related to long-term contracts. And you would have read the contents of the key audit matter. There is then the heading on going concern, and in this case appears to be a clean company, no issues with regard to going concern. So it says that the company's finances have been prepared using going concern, and management in the second paragraph under going concern says management has not identified material uncertainty that may cause significant doubt on the entity's ability to continue as going concern. Also, it is important here to note that there is this last sentence that has been given. However, neither management nor the auditor can guarantee the company's ability to continue as a going concern. And this statement is important because any reader who does not read this and just reads until this part basically may assume that it is the auditor's certificate that this entity is going to continue for the foreseeable future, and hence may be misled somehow. So it is important to clarify that this is not a guarantee from the auditor that the entity is a going concern. You then have the other information heading, and the description is not here, of course, and it would come up in the listed companies. Then you have the same management responsibility paragraphs and the auditor's responsibility paragraphs, which have not significantly changed with regard to the responsibilities. So the responsibilities more or less remain the same. The text has somewhat been changed, but you are not required to learn this because this will not be required to be reproduced in the P7 exam. You then have report on other legal regulatory requirements, which, as I said, can relate to something that is required locally within the national jurisdiction of the country where this audit report is being issued. You also have at the bottom three similar things that were there in the previous audit report: signature, auditor's address, and date. However, just before this, you can see that the engagement partner responsible for the audit resulting in the independent auditor's report is, and you are required to give the name over here. So, over here, right where the cursor is, as you can see, is the requirement to give the name of the audit partner, the engagement partner who signs the audit report. This is something new, was not required in the previous standard. Some countries had this requirement locally, however, but it was not there and in the previous version of the standard issued, which was IEC 700. So this is also a new requirement with regard to the name of the audit report, reporting engagement partner. Right. So this, I hope, explains a lot about how the audit report has changed. And we shall move back to the slides and also take one or two questions. So let's look at some of the questions that we have.
There are quite a few, Abdullah. There's one from Muhammad Ali Khan. If there's a conflict between management, then is this a material or a non-material matter?
If there's a conflict, and I assume that you're trying to say that there's a disagreement, which I explained was in the case of inventory being recorded at 150 when it should have in the auditor's opinion been recorded as 100. And if that is material, so that would result in a qualification or an adverse opinion. So you would either give an except for opinion, a qualified opinion, except for inventory, financial give it to fair view, or if it is pervasive, you will give the adverse opinion. And in such a situation, you will not give this as a key audit matter because the matter is not a resolved matter. So for a resolved matter, you're giving key audit matter. However, for an unresolved matter, which results in modification, that will not be classified under So can is not a substitute for modification.
What kind of question we expect in exam and how can we address that question?
That's a good one, yes. In the exam, well, this could come in many different ways. One, it could come in the Section A questions which are related to audit strategy and risk assessment. So you may be, as part of your risk assessment process, required to explain some risks which you already know how to do, but also the fact that they may have to be disclosed as key audit matters and hence discussed with those chartered accountants. Also, there could be questions set within Section B, which is usually at a slightly different stage of the audit, and that could be the execution or post-execution stage, like the reporting stage of the audit. And that is where you may have to mention that since this was such a significant issue in the audit, also material, so it should also be disclosed as a key audit matter and also discussed with those chartered accountants. So those are the various ways it could be examined. So key audit matter could come into play either at the planning stage or sometimes at the execution, later in the execution stage, or at the conclusion and reporting stage of the audit.
Second situation of KAM.
Second situation. Maybe that means give another example of a KAM. Well, so you have two here on the example that you just saw on the screen. So there was the valuation of financial instruments, and there was also the revenue recognition. Usually in any audit that you go to, revenue recognition is usually classified as a fraud risk, and that would of course become a key audit matter as well. However, you could also have other key audit matters. For example, if there is a high amount of credit risk, and in that case, of course, you would want to include recoverability of receivables and the understatement of provision for doubtful debts as a key audit matter. So that could also be a key audit matter.
Do you reckon we should practice the question on report because the format has changed?
Unfortunately, the problem is that there are not many questions that are available with regard to key audit matters. This is a new addition to the P7 syllabus and also a new addition actually to the auditing standards itself. So, unfortunately, you cannot find an exam bank that contains questions with regard to key audit matters. However, this is the reason why I wanted you to have a look at this. I would also recommend strongly that you go to some of the audit reports of companies based in the UK and in Netherlands. Because in the UK and in Netherlands, this standard has been adopted in a slightly different way. However, it does contain the key audit matter. So, for example, if you look at some of the big telecom companies in the UK, or you look at some of the big the manufacturing giants or conglomerates or telecom companies based in the Netherlands, and you can find out some audit reports of those companies. So you will be able to see that those audit reports are fairly long and they also contain the key audit matters. So I think it's a good practice to look at some of those reports. So that gives you an idea as to how this is drafted and how it is being presented in the actual real world.
There was a question in September 16 exam on KAM. Is that not available?
That's what I said. So there is no exam bank that is available. So there is a small question, yes, but then that's the only one perhaps. So there's not a lot of questions that are available right now. I'm not too sure if it's a good idea to go to the other institutes' past papers and have a look at it, because ACCA is usually very up to date with regard to their syllabus and the questioning in the exams. So I really don't believe that you will be able to find, even if you go to the other institutes, their exam banks, a whole lot of questions on key audit matters. So it's a new topic, it's an upcoming topic, and as this progresses along, of course, the level of testing is going to rise as well. So right now, this is the amount of knowledge I think that should be sufficient.
Okay. If the matter is not resolved at first and later on management agrees with it, then do we have to mention it in KAM?
Of course, if it becomes resolved, then it becomes a key audit matter, if it is material and significant in the audit assessment. However, if it remains unresolved and today you are supposed to sign the audit report, then of course you do not include that in the key audit matter, rather you put that into the modification if it is material. We'll take one final question.
Okay. There was a question. Can you please explain, do we have to explain a KAM by these paragraphs in exam, and what will be the type of questions that we're going to be tested with regards to KAMs?
We talked about the type of questions that could be examined, but whether or not drafting a key audit matter would come is something I will not be able to comment on 100% surety. And the reason for that is, of course, I do not know how it's going to be examined. But yes, if there is a significant risk coming out from question 1 or in section B out of the question 3, 4, 5, there is something that is related to reporting conclusion. So you may want to include that this matter should also be discussed with those child governance and also considered for inclusion as a key audit matter. However, whether or not drafting a key audit matter will come, well, it could. In the past, well, the audit report was so standard, such standardized audit reports were there that, drafting of the audit report was not coming in paper P7, and it was not expected. However, critical appraisal of the audit report was covered in paper P7. So now there is a possibility that a drafted key audit matter may be given, and you may want to have a critical appraisal of that draft key audit matter. There's also, yes, a possibility of you being asked to draft a key audit matter.
One last question.
Yeah.
This is from Fahad. Can you kindly explain briefly with example what would come in EOM paragraph when compared to KAM?
Okay. An emphasis of matter is something that the auditor wishes to draw the attention of. It is possibly not, sorry for that, not a key audit matter. So, for example, if there is a litigation that is going on in the court of law, and the outcome of that litigation is not certain, so the auditor may want to highlight that the outcome is not certain, and that is why the auditor may want to give an emphasis of matter. But that would not necessarily mean that the auditor has to give a key audit matter in the audit report on that particular case. All right.
And one more question.
One more? Okay, so we can take one more question.
This is from Hassan. Why would we put a matter as KAM if matter is already resolved? How would shareholder benefit from it?
Well, the shareholders basically, why this came into being and why is it happening is going to take some time to basically explain. But this change in the standards and the new standardized 701, why it came into being is as a result of a lot of hard work actually with regard to testing and assessing the usefulness of the audit report, which was done by the IASB. So basically what was done that the boilerplate, yes, no, pass, fail type audit report that were being issued in the past were not actually giving a lot of value to the shareholders. And it was usually that whether it's a tractor manufacturing company or it's a telecom company or it's a bank, the audit report would remain the same. All you need to do is just change the name and the year end and there you are. So basically there was not additional information that was being given to the shareholders. With this key audit matter initiative, basically, the shareholders, even those who have lesser knowledge of finance and auditing, would be able to at least identify that the auditor, what are the key areas where the auditor focuses his work on and what the auditor believes are the key issues in the audit. So that is basically the reason for the change in the standard. So that is how much, I guess, that is sufficient to know right now, because why is this being done or what are the benefits and all is something that was part of the previous papers P7 when this used to be an exposure draft. But well, yes, there can be a debate on what are the advantages and disadvantages of having this key audit matter or the whole lot of changes in the audit report when they come. Right. Now we should move to some other standards, and there is a series of standards covered in the 4000 series. So there are two standards over there, two very short ones, small ones, and not frequently tested. So perhaps you may be saying that everything that I say, I can say frequently tested. So here I can say not frequently tested. So you have ISRS 4400 and ISRS 4410. Now, what do these relate to? ISRS 4400 relates to agreed upon procedures, also in short known as AUPs, and ISRS 4410 relates to compilation units. So the full names of these standards are, well, different and longer, but just to give you an idea of what the standards pertain to. So So let's look at ISRS 4410 first, compilation engagements. Compilation engagements are basically engagements where an accountant, a person who has accounting expertise, is utilized, and he provides his accounting expertise rather than his auditing expertise, and that is being done to basically collect, classify, and collate information. So he's basically gathering all the data and preparing the trial balance, perhaps, or the general ledgers, finalizing them, and then preparing the financial statements out of all that. So in a compilation engagement, no audit is being done. No audit type procedures are being done. Neither is it a review, and no assurance is being expressed. So this would include, the example would include doing the tax returns or the accounts preparation. So this is also, one avenue whereby firms provide these services, and of course they charge for them, of course, and they are the accountants, the firms are basically using their accounting expertise. Now the issues associated with this is that if you do a compilation for a client, you would obviously not be able to do the audit for this client because that would lead to a self-review thread. So what happens usually is that if a company does not want to have a whole-time, full-time finance function that contains 5, 10, 20 people, so what they do is that they do have data entry people who could be 2 or 3 and much less as far as cost is concerned. And then at the end of the year, they would want that firm comes in, a chartered certified accountant firm comes and they perform the compilation for them based on the data that has been entered into the system. So they basically take care of all the disclosure requirements and they finalize the financial statements and present them to the management and the board. So in a compilation engagement, no assurance is being expressed, right? And the accounts are being prepared and all the accounting expertise is being used and auditing expertise is not used. Moving to agreed upon procedures engagement, which is ISRS 4400. An auditor is engaged to carry out procedures of an audit nature. So now what's the difference is that here it was all accounting nature procedures, accounting work, collecting information, collecting the data, gathering it, classifying it appropriately, and then building up the financial statements. Whereas here, you're basically carrying out procedures of an audit nature, but those procedures have been agreed with the management. Now, how is this different from audit? In an audit, the procedures that the auditor performs are not agreed upon. The auditor has not agreed that he will perform certain procedures. Rather, what the auditor does and what they do not do is totally dependent on the auditor's own professional judgment. So the management or the board or the shareholders, in fact, even are not telling the auditor what they need to do, what are the procedures that need to be done. So in an agreed upon procedures engagement, basically what happens is that the procedures are agreed. So for example, I give an example here. Let's say that management, they want to test their new aging system. So they say that, okay, we have a software and that software generates an aging analysis and tells us that which customers are less than 30 days old, 30 to 90 days old, and then greater than 90 days old. And by each customer, you have figures that are generated by the system. Now, management wants to have some assurance around this. They want to know that whether the system is working properly and the calculation of the age analysis is being done properly. So they want to know that if party A, let's say this is A, has $100 due less than 30 days, but $70 due 30 to 90 days, and $20 due at more than 90 days. So they may want to pursue this party for the receipt of the 20 and perhaps also chase the 70. So what they do is basically that they engage an audit firm, and that audit firm basically does a recalculation of the age analysis of each of these parties based on the list of invoices that would be provided by the management. Now, this is a procedure that has been agreed upon between the management and the practitioner or the audit firm. So this is what, as you can see on the slide, is also written as part of the description of agreed upon procedures. So an auditor is engaged to carry out procedures of an audit nature. The procedures are of an audit nature. Why? Because you're calculating and making sure he is following the right. As an auditor also, if you were to come and test the age analysis, you would be doing the same thing. But it would be your own judgment of how much you need to test, what is the sample size, what is your materiality level. In this case, in agreed upon procedures, there will be no open areas for the auditor to decide upon themselves. Rather, everything will be agreed. So management will say that I want you to test everything that is more than $20, that's it. I want you to test everything that is falling greater than 90 days, that whether it is actually greater than 90 days. I want you to test anything that is falling within less than 30 days, that maybe should have been in more than 90-day category. So all of these things would be done by the auditor. The results of such a report, however, are confined to those parties that have commissioned the report, who have asked for this to be done. So this is not a public report. So it is very rare that you would find an agreed upon procedures report that is widely publicized. So usually the audit report is a public document. It's a public report if it's a listed company especially, and it is available to the general public on websites and all. However, an agreed upon procedures report is, since it's the whole purpose of the exercise is for the management actually, or the board or some other persons in the entity to be satisfied by regarding a certain thing. So that is only shared, the report is only shared with those parties and not shared with them. Also important for both of these types of standards, that the agreed upon procedures report and compilation reports or engagements, they provide no assurance. No assurance is expected. So this basically means that now there are 4 levels of assurance. One is absolute assurance. The accounts are perfect. And this is impossible to achieve, and hence it is never given. Second is reasonable assurance, which is provided as part of the audit. In our opinion, the financial statements give a true and fair view, and you positively giving this assurance. Third is the moderate or negative assurance, in which you say that nothing has come to my attention that causes me to believe that the financial statements do not give a true and fair view. And now you see the fourth form of assurance, which is fourth form, no assurance. So there is no assurance that is being expressed in a compilation agreement or in an agreed upon procedure. So in a compilation engagement, no assurance means that you are preparing the financial statements, but you're saying that I haven't audited them, so I'm not taking responsibility for whether they are true and fair. You just gave me the trial, and I converted that trial into financials and presented it to you. So I just added up the numbers, grouped them, mapped them appropriately, and according to standards, prepared the financials. But the back-end working behind the numbers, whether that is correct or not, I don't know. Similarly, in case of agreed upon procedures, no assurance means that you are basically saying that, well, I've done this analysis, I've recalculated all the numbers, but I do not know whether we actually made that sale or not, because you just gave me the invoices, and I looked at the date of the invoice and placed them in the right bucket, wherever it should have fallen. Examples include matching the new system balances with the old balances and recalculating age analysis, which is the example that you are also looking at on the board. So in these types of services, you agree the terms with the relevant parties. So for example, just like in the audit example, the audit case, you agree terms with relevant parties in case of an engagement letter. And also over here, you agree terms with them so that both cases agreed upon procedures as well as compilation. You carry out the agreed procedures. Report, of course, no assurance is expressed. The report is only your factual findings, and the information does not have to be financial. Well, this is something as well to consider. And it is not necessary that the information is financial. Sometimes they may ask you to do certain procedures that appear to be authoritative but relate to non-financial areas. For example, they may want you to go through the personnel file of employees and to have a look at whether each one of them has a medical certificate, and if, according to the health criteria that they fall into, the benefits that they have been given are appropriate or not, and you just report on that. Information compiled should have reference to the fact that the information is unaudited. Of course, whenever you will give a compilation engagement, you have not audited this number, you just compiled it and not audited. So hence, on each page of this financial information that is compiled, or on the the top, you will write that this is unaudited. This word unaudited will be written on the financials that you are going to prepare as part of the compilation. Any questions with regard to ISRS 4400 or 4410 before we move on to a more important area of social, environmental, and performance auditing?
Can audit firms perform AUP?
Yes, audit firms routinely perform AUPs, and more so they do that for many of their clients, which are non-assurance clients as well. But compilation engagements are also performed by audit firms, but then if you do a compilation engagement, then it will create a self-review thread if you also do an audit for that particular company.
Is ISA 701 already done?
Yeah. Key audit matters as well.
Can you please explain all different types of assurances, please?
Yeah, I just did that. So there are 4 types. One is the absolute assurance, which is practically not possible. So you do not give that assurance because at the human level, you cannot say that the financial statements are perfect. So you do not do that, and that's impossible, but that's one level. Second is reasonable assurance, which is that given in the audit, so that it is expressed in a positive form, and you say that, in our opinion, the financial statements give a true and fair view. The third is the moderate or expressed in a negative form of assurance, in which you say, which is the third one, in which you say that, in our opinion, nothing has come to our attention that causes us to believe that the financial statements do not give a true and fair view. And then is the fourth level of assurance, which is no assurance, in which you say that either it is expressed in the form of compilation or agreed upon procedures. So you are expressing no assurance.
If agreed upon procedure, the report or accounts later discovered to be materially misstated by other auditors, still no accountability on audit firm who has performed the AUP?
Of course, because in the agreed upon procedures, all you have to do is perform the procedure that you agreed with the management. So if the auditor comes in and the auditor identifies certain things, well, it's the auditor's prerogative to do what he wants to do and verify whatever sample size they like and do that. However, if they identify something that relates to the work that was done by you, and that work is, let's say, well, wrong because you were negligent, then the company could bring about charges against you for negligence. However, that does not mean that you don't have any responsibility or liability. Of course, you have liability for every audit report or otherwise any other report that you're giving. So, on the part of negligence and all, well, yes, professional liability can arise.
If audit firm changes audit partner and also audit team members, still will there be a self-review threat?
Well, at the firm level, of course, if it's a private company, things would be different. If it's a listed company, of course, it's a significant threat. So the same firm has actually prepared. But well, as theoretically, as for the code of ethics, you could have that Chinese wall concept, different office, different partner doing the preparation and doing the audit. But then, of course, for the listed company, the risk would be much higher in case of compilation. In private companies, yes, with the Chinese wall, it is allowed.
Do we need to report on agreed upon procedures or compilation engagements in audit report?
No, not in the audit report. So they are apart from the audit, they're not a part of the audit. So what you're doing basically is it's either compilation or agreed upon procedures or an audit report. So an audit is separate and these two engagements are separate. No more questions for now? All right. So
examples of agreed upon procedures.
Examples of agreed upon procedures. So one is the one that you see over here, the bucket format and the calculation. The other one is here mentioned on the slide that you see here. So matching the new system balances with the old. So for example, an entity has changed its ERP and it wants to make sure that the closing balance in the old ERP is also going to be the opening balance in the new ERP. So you engage an audit firm that comes up and matches each one of them and gives you a report if there is no difference. So that could also be an agreed upon procedure. Right. Now is the time to move to social, environmental, public sector, and performance auditing. And the slide that is in front of you is a really important slide. Because it describes the difference between the 4 types of engagements, and we'll also follow this up with a question, so that we are sure of what we are doing. But before we do that, it's important to highlight one thing, and that is that audit is over. So take off your audit hats and put on your other hat. You could be now a consultant, an advisor, a reviewer, a practitioner, an environmental auditor, a public sector auditing person, performance auditor, but not a statutory external auditor. So take that hat off, and now whatever we are going to discuss will not be related to financial statement audit or external audit or statutory audit. What you see on the slide in front of you is basically the 4 types of engagements or auditings other than statutory audits. And all the 4 types, well, can be examined, any one of them. But what has been seen recently in the most recent of the paper P7 attempts is usually what you see on the right side of the screen. So performance information auditing, especially performance information auditing in the private sector, and also public sector auditing, where also performance information comes into play, is something that is examined now at the P7 level. Environmental auditing has been the topic of many P7 attempts in the past, and it is continuing to be so, and the reason for that is, of course, that this is something that about which the general public is now much more aware. Social auditing is something that is slightly less examined at P7 level. However, since it's part of the syllabus, so, well, it could come any time. Now, environmental auditing. This has 2 aspects. One is the consideration of environmental matters as part of the audit, wherein IC 250 and ISA 315 come into play. Or there is the second aspect to it, which is providing assurance on environmental information. And this includes all the examples that you see on the bottom in the environmental auditing column, which is eco-audits or environmental audits, environmental SWOT analysis, assurance on specific KPIs, and these KPIs could, for example, include, for example, there is a beverage manufacturer, and you would know many of them operating in your countries. So beverage manufacturer, and this person, this factory, is obviously using as one of its main raw materials, water. So they want to know the amount of water that goes in versus the amount of water that comes out, the output. So is this ratio good or not? Let's call this the water usage ratio. The water usage ratio. So for each liter of carbonated drink that they make, let's say 1 liter, how much water do they use from the ground, from the underground, which they are pulling out using technology? Let's say that this ratio is 2. So they take 2 liters of water underground, filter that water, clear the impurities, clean all the bottles as well, and then fill them up. So 2 liters of water is used to generate 1 liter of carbonated drinks. So this is something that will now be called, as what you see on the slide, an environmental KPI. And if you say that you want to bring this down, and the entity claims that they have brought this down from 2 to 1.75 liters, the shareholders would naturally want to question this, and they would want to know whether this is the right figure and it has been achieved. But that is where an audit of this figure would come. Now, how would the audit of this be performed? So the audit of this would not be performed in a way similar to the audit of financial statements, the statutory or the external audit. It would be much different from that. And what would you be doing over here? Well, so you would select on a sample basis and also perform surprise visits to make sure that what amount of water was actually coming in. You would also want to look at the bill that has been sent by the water utility company and tell you that we are billing you for this amount of water that you used. Or if there are flow meters, you may want to take the report of the flow meters to make sure that how much water was actually pumped out of the ground. And then you will review some of the information with regard to the revenue. So this is a very different aspect of auditing as compared to testing inventories and receivables and fixed assets and trade loans and borrowings and interest costs and all that we discussed as part of the statutory audit. Another KPI, for example, that you also see there is kg or of plastic recycled. How much plastic is actually recycled? This is especially true in case of the recycling industry. For example, there are many companies that actually use used plastic, convert them, mold them into usable plastic. For example, they make chairs out of it. So let's say that they pick up all the plastic waste, and then they make chairs out of that. So how much waste in kgs or tons was actually used to convert it into how many number of chairs? Plastic chairs, right? Or recycled. And then waste not utilized. How much waste generated by the entity was actually non-utilizable waste, non-reusable waste. So those are some of the KPIs that are made as part of the environmental audit. So it's important to understand now the areas around which this is split and what are the key procedures that you could perform. So think about this for a moment and think about what are the different ways of auditing environmental information. So as I just gave you in these examples, for the beverage manufacturer it would be different. For the plastic manufacturing, plastic chair manufacturing company, it would be different. For the company that is utilizing waste as part of its manufacturing process, it would be different. Now, there are even companies that are using steam generated as part of their factory operations and reusing that steam as an raw material, as an input. So the world is changing quite fast, and you are getting to know that there is a lot of awareness with regard to environmental issues and how the impact of what you do, can at an environmental level be significant, and also how that can be reduced. So entities, as part of their CSR, of course, corporate social responsibility, are also highlighting this fact in the annual reports, which forms, of course, part of the other information in the annual reports. Moving on to social auditing, which you see on the slide. So again, there is the flavor or aspect of IEC 250, consider the impact of breach of laws and not just the financial impact. So this would basically involve, for example, social laws with regard to not utilizing, people who are not eligible for employment, also known as child labor, minimum wage rate, whether the rules with regard to minimum wage rate has been complied with. So for example, let's say that you go to a country and you audit them, find out that the minimum wage rate for that particular country is $1,500 a month. So no one person should be getting below this amount. That's quite, I don't know, big, small, well, that's just an example. So, so you go over there and you do the social audit to find out whether, go through the payroll records to find out who was paid what, and on a sample basis you verify that whether this amount greater than or equal to but not less than was utilized, right? So you do the audit on this part. Similarly, also child labor, health law compliance at the workplace. So for example, this could involve, the social audit could involve whether you are giving appropriate safety equipment to your factory workers. So you do a surprise visit on the factory and you find out whether everybody is wearing the helmet, gloves, shoes, and other, the whole uniform maybe that they're supposed to wear as part of working in that particular environment or factory. If anybody is exposed to, let's say, hazardous chemicals or gases, so they have the face masks and all other things with them. So all of those things, of course, are considered as part of the social audit. So the type of procedures now that you would be performing as part of a social audit would, of course, entail, perhaps surprise check to find out whether any child labor has been deployed in the factory, a check on the payroll records to make sure that the minimum wage criteria has been met, and then looking at going through the factory, making a visit, a surprise visit perhaps to find out whether the health laws have been complied with or not. So again, you see that the amount of procedures, the extent of them, and the nature of the procedures will be very different when you are doing the social auditing. We now move on to the other two aspects on the right, which are, well, more frequently tested now as compared to what they were in the past. One is the public sector performance information auditing, and one is the private sector performance information auditing. So this I would try to explain by giving a few examples. Performance information is information about performance of a certain entity, aspect, or matter. And now this basically includes, well, this would also include financial information, but it is more focused towards other information. So for example, let's talk about a hospital. And let's not discuss whether this is a public or a private hospital. What is the purpose of a hospital? The purpose of a hospital is not to earn a profit. The purpose of the hospital is not to increase shareholders' wealth, which you usually see in commercial entities across the world. The purpose of a hospital, well, let's say created by the government, or for example by some non-governmental organization that works as a charity, the purpose is to provide good health facilities to the community where it operates. So how would you know whether the hospital performed well or did not perform well? For this purpose, you would want to have certain KPIs that are other than financial performance. So KPIs that you would want to see for this hospital will not be profit or revenues or working capital. So these KPIs will not be relevant. The KPIs that would be relevant for a hospital would be very different. Think about some of the KPIs. The KPIs could be number of successful surgeries, turnaround time, occupancy in days. So turnaround time would mean what is the number of minutes that a patient enters emergency and treatment is started. So if it's 15 minutes, you may want to bring it down to 10 minutes or 5 minutes. That a patient enters into an emergency in the hospital. And how long does it actually take for an MD, a doctor, to come and start treatment, whatever the treatment may be. Right? So turnaround time. Occupancy, how much of the rooms are occupied, tells you about how well famous in those terms the hospital is in terms of occupancy. Then we'd also want to see what is the average number of days. Average number of days that a patient is admitted. Patient admitted. So of course this would be different for different types of patients having different types of problems. But you may want to say that, let's say, in the neurosurgery department, how many people actually get admitted into the neurosurgery ward? And what is the average number of days that each patient takes in that ward? So this again is very different from what we were discussing just a few moments ago and what we were discussing in the last 3 days before today. Nothing financial over here. Number of successful operations, turnaround time, emergency, occupancy, and average number of days the patient remains admitted in the hospital. So these are very different procedures and KPIs. And the auditor's procedures with regard to these areas would be very different. So as you can see now, this happens in the case of a hospital, which could perhaps be a public or a private sector entity. Now if you go to the slide again, and you see the public sector, so you see over here where the mouse is, public sector, performance information. So basically in the public sector, how would this be different? In the public sector, what you're looking at is basically, the government does not want to earn profits out of its products. The government is there because it collects money from the taxpayer and wants that money to be spent on welfare. So the government is more interested in whether the objective or the purpose of the creation of the entity has been met. So they would want to know that if the hospital was created in a town or a community for the purpose of the welfare and provision of health services to the community, is that purpose being served or not? So as you see on the screen, that the review of the purpose for which the entity is formed rather than the financial performance. So the government would not be happy if the hospital comes out and says that, you know what, our profit increased by 20%. So they're giving you more money this day. No. Was the satisfaction of the community with regard to health services actually obtained or not? It's more important. So examples would include water, electricity providing authorities. So for example, the utilities provision entities that are providing water. So they would want to know as KPI, what were the outages, electricity especially. Sorry for that. Also they would want to know, for example, for the Parks and Horticulture Authority, that what is the level of beauty that is seen on the roads, in the green belts, in the parks, whether people are satisfied with the amount of cleanliness. And the national sports body may want to see whether the sports entities function appropriately, the number of tournaments that have been held, the number of international tournaments that have been won, the ranking of, the football team, for example. Right? So this is how they want to gauge the performance, rather than say, okay, our national sports body earned a profit of X million dollars, and that is very good. No. Now, how does this flavor change when you move from performance information to private sector? So it changes, as is mentioned over here. So it's assurance for non-profit, non-governmental entities existing for welfare. So these could be charities, private hospitals, universities, colleges, football clubs, community football clubs, for example, or other sports clubs, right? And all of these could be included as part of performance information auditing in the public sector. So this table basically explains to you the differences between approaches for these four. Now, a quick recap of each one of these areas. Social audits. These would be undertaken to see if social targets have been met. Is there a rationale for engaging in socially responsible activities? Are social programs congruent with the mission of the company? And assess objectives of the social policies and evaluate the performance of the company. On the other hand, environmental audits would assess how well the organization performs in safeguarding the environment in which it operates. Also assess whether the company complies with environmental policies. Obtain a copy of the environmental policy, for example, and it says that you're not going to have more than 2 liters per liter of carbonated drink as your water usage ratio. Assess whether it will achieve objectives and what these are, and test implementation and adherence via discussion, observation, and walkthrough tests. So you want to walk through, you want to physically inspect the premises to find out that. When you move back to the audit, in the statutory audit, you also have to sometimes look at the social and environmental concerns because they obviously trigger IEC 250 and IEC 315, the planning and risk assessment stage, and the compliance with laws and regulations. So what you want to do is that you want to have, as part of your knowledge of the business, an understanding of what are the key environmental and social laws surrounding the entity, and which ones are the major ones that, if breached, could result in significant problems, financial or non-financial, for the entity. And inherent risk assessments. You build that into the IR assessment. Substantive procedures in a normal audit with regard to environmental and social issues would include provisions for site restorations, fines, and compensation. This is something that has been examined in paper 7 before. Contingent liabilities, for example, if there's a pending legal action against the entity for environmental, something that has been done, environmental law that has been breached. Asset values and impairment. Capital versus revenue expenditure, cleanup and rectification cost, whether those can be capitalized or not. That can also be a key issue in the audit. And development cost for new products, of course, and also going concern issue. So it becomes very important, for example, in the pharmaceutical industry. In the pharmaceutical industry, you are actually preparing medicine and giving that to the community, selling them. So if there's one product that is banned or a chemical that should not have been used and the government has banned that and you use it or put that more than the amount recommended by the government and somebody, God forbid, something happens to them. So of course it can result in huge penalties for you and it can also result in your license actually being cancelled. It can also result in going concern issues. So at the extreme level, breaking environmental and social laws can actually threaten the survival of the entity and cause a going concern. So those are most of the areas that relate to this particular aspect, the 4 social, environmental, public sector, and performance information auditing. Now we'll do a question, and this question is fairly recent. So once again, I'd just like you to highlight what is you see on the screen. So just the 4 areas that you see. And for this particular question, I shall give you 15 minutes. So what do you have to do? You have to read the question and prepare the answer plan. Prepare the answer plan for this particular question. And what is this question going to be? It's December 2015, question 2, part B. So it is question 2, part B only. Right? So 15 minutes, start now. September, December 2015, question 2, part B. It is available in the handout space. You have, well, you should plan it in a way that you spend about 7-8 minutes trying to read it, and then another 7 to 8 minutes preparing an answer plan. And then put that in the question text box, your answer plan, and we'll discuss that shortly. So 15 minutes, start now. All right. We have 15 minutes time that has lapsed now. So this question was 10 marks related to Rothko University, a university that was a small university, well, with 2,000 students. And there was some information that was given, and the performance area, performance measures, and the results for 2015 were also mentioned within the question. Now, as part of the question, it was divided into two parts, although it was not known that what are the number of marks available for each sub-part. The first one was discuss the relevance and measurability of the reported performance information and recommend the examination procedures to be used in auditing the performance information. Now, before we discuss this, there's just two or three things that are coming up in the question text box, which I wanted to highlight. One is many of you are concerned about whether you will be able to get the slides that you are seeing. Yes, these will be shared with you by the ACCA after this whole course has ended. So once you are done with the Saturday question and we have done the 2-hour debrief on that question on Saturday, after that, ACCA will be sending out the slides which you will be able to refer back to and use again. Also, there is a question with regard to an emphasis of matter from Hassan Tariq. So there are a few questions as well on reporting and key audit matters. So since we are slightly ahead of that now, so I would like to cover those somewhere around the end of the session. So 9 p.m. or 9:05 Pakistan time is when I can be responding to those questions. So we'll just park that in the parking lot for about 50-55 minutes and we'll come back to those questions. Right now, let's focus our attention to this one. So, do we have some responses on discussing the relevance and measurability of the performance and what are the examination procedures that should be used in auditing this information?
To test the graduation rate, we need to compare last year's number of graduates with these years to check the increase or decrease in the number of graduates. This would rather be more clear to determine the rate of graduation. Instead, that we just see this year rate. The performance indicator is to be properly linked as in relevance with what area is being measured to see the correct performance level aspects.
Yes, that is a good one, and it would lead to you getting some assurance with regard to the number of graduates that is mentioned over here. But again, a follow-up question is that would that be giving you the desired level of assurance? The reason for this is because the question requirement says recommend the examination procedures to be used in auditing the performance information. So you're going to audit and give reasonable assurance about this performance information. So perhaps you would have to do and think about what else could additionally be done. And let's look at what other procedures we have.
From the same student, which is Kiran, with regards to academic performance, the measure used is again showing one perspective of those academic students who achieved distinction. Is it not important to cover the whole academic performance of the entity or for all students, such as keeping the percentage cutoff for those who achieve average and top ranks?
Yes, that's a good one on the relevance and measurability of the performance information. Definitely, that is an important point. Also important that percentage of students achieving a distinction is mentioned as 20% here. Now, 20% may be on the higher side, considering the fact that it's a distinction. So a distinction is something that will be one student perhaps getting in the class of 50 or 100 maybe. So you would technically, theoretically, you would expect this to be somewhere maybe 1, 2, 3%, not more than perhaps 5. So maybe you want to see what is the definition of a distinction. Or was it that there was such a wide variety of students getting a wide number of distinctions in a whole lot of different subjects that the percentage of distinction actually shot up? There would also be the reason for this 20% being 20%, that the denominator that has been used to calculate the 20% is actually something that does not correspond to the exact value of the number of students. So you may want to have a distinction on academic performance divided into each of the subject categories. So for example, you may want to see what is the percentage distinction within each of the categories of business, accounting, finance, law, and marketing, which are the key subjects which are taught at this university. Also additionally, on the employability matrix, which has 65% students who on graduation obtain graduate level employment. Now, this could be overstated, perhaps. And the reason for this is that it obviously puts the university into a good light, that people who come from our universities, who graduate from our university, actually get decent jobs. Now, was the entire population of graduates obtained? That is an important one on the relevance and measurability of the performance measure. And also, in trying to audit it, you also want to know what is the denominator that needs to be used within this number. So did you just take all the business students and then calculate the number of people who got the jobs? And were the jobs actually high-paying, equal value jobs that you believe should be given to people who qualify from the university or graduate from the university? Some people tend to not get the right level of job, and they just get whatever job is available, which could be half the salary of what a graduate should be getting. And did that actually classify as a job as well or not? So you may want to have a look at that too. Other comments?
From the same student, Kiran, only the students to be targeted to measure. Why not the idea to have the number of staff available to teach those 2,000 students? The performance is relevant according to the performance 2 is relevant according to the degree that students are taking, and then measuring performance like number of students passing a particular subject.
Yes, that is a good one as well. Passing a particular subject, so you are teaching 5, 6 major subjects, finance, law, business, and all that. So you would want to have a look at that. Also on the fact that why staff is not being undertaken. Yes, so there are 4 ratios that you have in question, and they mainly relate to students. So you have graduation rate, you have academic performance, you have employability, and you have course satisfaction again, which is dependent on the students. But you will also want to have a look at the teacher-student ratio, for example. The teachers who actually end up having students who got a distinction, or the teachers who have been there for a longer period of time. That also gives you some amount of, KPI and can be built into it as a KPI as to what is, being given to each satisfaction with regard to the students and the performance of the university. Other measures,
There's one from Nakash as well. For course satisfaction, should we not use other measures like those students who may not be satisfied with the course will reflect the performance or university more clearly? Moreover, these measures will also be different to measure.
Yes, it's a good one. And on the last graduation 70% metric that we have here, it says percentage of students who rate their university experience as excellent or very good. Now, you may want to know how many of this is excellent actually, because maybe, just 5% is excellent and the other 65 is actually very good. And so combining the two is maybe not giving the right kind of information that is required. And also, you may want to know for the people who did not rate this as very good or excellent, that is to say the remaining 30%, what did they actually think about this, and why do they believe that it is not very good or excellent? So you want to go to that as well. And within that 30%, how much was actually rated as very bad, for example, or not good? So whatever the category might be. So those are the things that need to be seen. I would also like you guys to go to page number 26 within the answers, where you can find within the ACCA suggested solution the marking scheme for this particular question. And on page 26, if you just go over there, you will be able to see that there is generally up to 1 mark available for each point explained. So it is this page 26 that you should be able to see. 1 mark for explaining why each measure would be relevant to an existing or potential student. Problems in defining the measures, problems in quantifying the measures. Some of these are obviously subjective. Issues in validity of the reported information and lack of comparative information. Also, what are the examination procedures you would be using? So there's a whole long list of procedures that could be written here. So to get the 10 marks, actually, if you apply your mind and you think about the procedures that you could do, rather than give general or vague description of the procedures, that would actually result in getting the whole 1 mark per procedure. So one key thing to remember as an exam technique point within the environmental performance auditing aspect is that the procedure that you write should be very specific. Do not give general procedures. Do not give vague statements. For example, saying, verify the number of students, verify whether the graduates actually graduated. So things like these will not actually enable you to get the whole number of marks that are available. So for example, if you see on the marking scheme, page 26, it says, obtain a list detailing all of the university's performance objectives and the basis of measurement of the DH objective. So you find out what is the basis for measurement, what classifies as a distinction, what is excellent and very good, and how do you calculate the calculations that have been, the percentages that have been written over there. So that is going to give you the full mark, rather than giving general descriptions. So I think it's a very important point to remember. Do not give general statements, do not give vague statements, and generally describe procedures. Rather, be very specific to the Rothko University example that is given here in the question. Okay, now we also want to move to the examiner's report. So if you go to the examiner's report, and on that report you have the page number 2, which has comments with regard to question 2. So something should look like this. And if you go to the second paragraph within the question 2, what does the examiner have to say? The second part of the question differed between international and Singapore exams and the UK and Ireland adapted exams. The international exams focused on the audit of performance information, a relatively new topic in the relevant syllabus, and required candidates to discuss the relevance and measurability of key performance indicators in respect of a university and to describe how they might be audited. Well-prepared candidates were able to discuss the issues surrounding measuring and determining relevant performance information, and so were able to draw on the information included in the recent examiner's article on this topic to the scenario. Some candidates did not focus on the question of audit and attempted to describe the theory of public sector KPIs. Many candidates were unprepared and left this requirement altogether. So the key thing is that if you get scared by it, it's part of section 8. Question 2 must be attempted. It's compulsory. You cannot skip it. So if you get scared by this, that this is something out of my league, it's something I do not understand at all, well, there's hardly a chance you will get many marks. So what do you have to do in such a situation? You should try your best to apply your mind. And it is proven by this experience that we just had that if you actually stop and think for a moment and start thinking about and preparing an answer plan, actually many things come into your mind. And as you just saw on the marking scheme, that in the marking scheme there are more than the required number of points that are available. So all you had to do was just write a few of these and, well, 2 or 3 of the upper part, and you would be able to get a significant amount out of the 10 marks that are available. So I think in questions like these, it is actually much easier to get 7 or 8 marks out of the 10 that are available. And these are the types of questions that you should definitely give a chance to. So I don't think that it would be a good practice to do that, but however, it is also pertinent to note that do not give general statements or vague statements whenever specific procedures are asked. This area, performance information auditing, public sector performance information, and environmental and social performance auditing, is an area that is continuing to be of significant importance in the world. And of course, it is an area that is a significant part of your syllabus as far as the non-assurance portion is concerned. And this is something that has routinely and frequently been assessed in the paper P7. So you should not expect this to go away. It is going to continue to come in your exam, and you should be fully geared up and prepared to answer any of these type of questions. Any questions?
Just a question. When auditing performance information, is it better to identify stakeholders first?
It depends on the stage at which the question has been set. So in this case, well, some mention of with regard to relevance and measurability, you may want to do that. But not all questions would like that. Why? Because sometimes it directly asks you, the question directly asks you for procedures. So in procedures, you have to actually give the procedures and not discuss the relevance and measurability and how difficult it is to audit them. So only in cases where you have been asked about relevance, measurability, and whether it is difficult to report on performance and audit and performance information, only then I think there would be some reference to that particular aspect.
How can we check if 20% distinction is relevant or not?
Yes, the relevance of distinction. First of all, the definition of distinction. What is the university saying as a distinction? Is it actually a distinction? Where does the distinction classify as a distinction? Is it at the university level, or is it at some external third party, for example, a board or a government institute that actually says that, yes, you got the top position, and hence it is the distinction. So a distinction may be, just the first position in the class, which may not be very relevant. Or a distinction may be the first position in the city, in the province, in the state, in the country, which is, well, something that is definitely a distinction and should be categorized as such.
Can we comment on the type of student the university gives admission to? For example, they may only give admission to students who have excellent school grades.
Well, this question did not really pertain to admissions, and so it may not be very relevant over here, because it directly asks you about the 4 metrics that were there, and you have to tell what are the examination procedures used for them. So I think it would be a good idea to remain focused and stick to what has been asked in the question, and not to detract yourself to other areas. Sorry. However, if there is an additional 5-mark question, and that asks you about, what other measures could be used, for example, the additional information that we talked about when we did question 1 yesterday, then there is a possibility, yes, of course, that you may want to discuss those aspects, such as what else would be important or what other information would be used. Maybe also had this point just now talking about the teacher satisfaction or teacher scores. So that may not be directly relevant to this answer, because the 10 marks were not asked for that particular area, additional information. But if it comes in the exam, then yes, it could be something that you could think about. That what else other than what has been given in the question could be relevant for this university or hospital or public utility company.
Students had to pay $10,000 per year, so they should be getting some discount for achieving distinction, or should they not?
Again, something that is going out of the part. Why? Because this is not something that is directly asked in the question. The question says, these are the 4 metrics, the 4 percentages. Now, what are you going to do to audit them? What are the examination procedures? So let's just stick to the 4 that have been given. Right.
So do we need to synchronize the answer with respect to the entity?
Synchronize with respect to the entity? Yes, of course, because whatever has been asked is related to the Rothko University. So you do not give general statements about how a university should be operated and what should be the KPIs of a university, because in this particular scenario, you actually have the Rothko University, about which the entire data is available to you. So you remain focused on the Rothko University, on the 2,000 students, on the 5 subjects that are taught, and on the 4 metrics that are given in the question. And do not detract to the other areas, which, well, sometimes can be very attractive to do, but will not result in getting many marks. Right. So let's move on now after this section of the audit, non-audit areas, and we are now moving towards internal audit and outsourcing. So we discussed a bit on the internal audit part yesterday, and that was with regard to ISA 610. And I just want to add here that we discussed using direct assistance yesterday. So the auditor could use direct assistance as part of the external audit of the financial statements. Now we are going to cover another aspect with regard to internal audit, as well as certain other areas that are covered. So this is not directly ISA 610, but something that is broader than just what is the scope of ISA 610. And that is outsourcing. Now, what is outsourcing? Well, it is something fairly common in the world and happens in many different places of the world. It is the process of purchasing key functions from an outside supplier, for example, for contracting out certain functions. So, let's say I have a company and I have different departments, and what I want to do is that I do not have the expertise to handle and manage the payroll of all my employees. So what I do is that I hire another company and I tell them that you are the HR experts. So they are the HR guys. And they manage all the personnel records, the personnel files, the health status of each employee, the employment status of each person, the retirement benefit that need to be paid to them, and the payments in case of medical requirements or other requirements that need to be done, and of course tax payments as well. So anything like that is handled not by me but by that company on my behalf. So I pay that company a monthly amount, a fixed amount per month or quarter or whatever, and in exchange of that, basically that company is offering me this service. So basically I do not have an HR department, rather I have outsourced my HR department to that particular company. Now what would happen in this case is, from the audit perspective, that when the auditor comes in and he asks me for information with regard to payroll, what would I say? I would say, I don't have anything. Reason is, I don't have an HR department. It's that company, I pay them, and they manage the payroll. I don't do payroll. So whatever has to be paid, they just tell me that employee number 1, 2, 3, 4, 5, you pay this amount to this employee, transfer that into their bank account. That's all I do. The calculations, the tax deductions, the medical, the other perks and privileges, all that computation is done by that particular company. So of course in this situation, it leads to the auditor who's auditing my financials. He is facing a problem because he cannot get the evidence from me. He cannot directly get that evidence from that company. The reason is that that HR company does not actually know the auditor. So what do? It is in this case that ISA 402 and ISA 3402 come into play. Now, what are these standards and what do they mean? ISA 402 relates to service organizations. So the entities that are using service organizations, what should the auditor do with regard to them? And ISA 3402 pertains to the auditor of the service organization. So ISA 402 would apply to the auditor of the entity that is using the service organization. Whereas ISA 3402 will pertain to requirements for an auditor of the service organization. So that person who is my auditor will want to make sure that the way in which the HR expense of my company has been recorded has been done appropriate. So if that auditor, who is my auditor, would want to understand the system of the service organization, that would probably take a lot of time and effort because the auditor does not know that company, does not know the system, does not know how it is done. So they may want to rely on the auditor of that service organization. So basically now 4 parties come into play. One is me and the company whose payroll has been outsourced. The other is the service organization. They are handling payroll on my behalf. Party number 3 is my auditor. And party number 4 is the auditor of the service organization, who knows the service organization system and how to do all those things. So what will my auditor do? My auditor is going to rely on a report that will be given by the auditor of the service organization with regard to the controls that are in place and the system that is used to calculate the HR, the payroll related expense that is recorded in my books. So this is where ISA 402 and 3402 come into play. Now, examples other than the payroll function could be the pension function, tax related function, the entire payroll, as I just said, invoicing, credit control, and the entire accounting function as well. This is also happening these days. Now, implications. An organization that provides service to another organization, that is the service organization. In my case, the HR company is the service organization. User entity, the entity which purchases those services. In our example, it's me, the company that has given the payroll services, outsourced the payroll services to the other company, service organization. Now, at the planning stage, what does my auditor need to do? On my auditor, ISA 402 is applied. On the service organization's auditor, ISA 3402 is applied. So we're talking about my auditor. So the person who is the auditor of the user entity, what does he need to do? You see on the slide, know what is outsourced, understand the contract, and understand the risk of misstatement. Designing what the procedures. Now, what are the procedures that my auditor would want to do? Contract nature. What is the nature of the contract that I have with the service organization? Degree of authority delegated. Quality assurance. Nature of assets that are involved. And the reputation of the service provider. What is the reputation of the service organization? Now, procedures that would be adopted. Inspecting records and documents held by the user entity. Establishing the effectiveness of internal control. Obtaining representations to confirm the balance in transactions from the service organization. And performing analytical review on the records maintained by the user entity or returns received from the service organization. Also, these procedures would include requesting specified procedures performed by the service organization or the user entity's internal audit department, reviewing information from the service organization or its auditors concerning the design and operation of the control systems. And that is where ISA 3402 comes in. So my auditor would want to rely on the report of the auditor of the service organization, who is going to give a report which is not an audit report. It is different from the audit of financial statements. So this person who is giving the opinion as per ISA 3402 is giving basically an assurance report on controls at the service organization. And he is commenting on whether the system that is used to calculate the payroll expense of my employees, that system is operating effectively. And that includes the two types of report, the type 1 and the type 2. So in the type 1 report, the auditor of the service organization is basically commenting on whether the controls have been suitably designed and implemented. In a type 2 report, the auditor of the service organization is commenting on whether the controls and the system in relation to processing of payroll for my employees is not just suitably designed and implemented, but also is operating effectively. So that's the difference between the type 1 and the type 2 report. Now, using this report, if the auditor makes use of the service organization, this is on the slide, if the auditor makes use of the service organization's report, he should consider the reputation and skill of the service provider and what the report is about, and should not refer to the report in the auditor's report. So my auditor will not be mentioning the fact that I audited this company, but for payroll, don't ask me. Ask the auditor of the service organization because they are the ones doing it. No. It is my auditor who's taking full responsibility for the entire audit of financial statements. Right? But it is the auditor of the service organization actually who's taking responsibility for giving assurance on the system and the controls of the service organization, but not on the financial statements of me or the service organization. This has come up in a question once, perhaps in the last many years, and that once was actually very recently. So you saw that in one of the recent attempts. It was March 16, I guess. And yes, many candidates were not expecting it, and this is something that had not come up for many years. So people thought that maybe this is some area of the syllabus that is just confined to the, under the table or carpet or something. However, things like these can happen. Many times you have areas that have not been tested. For example, agreed upon procedures and compilations, and they all of a sudden just come up and pop out. So it is important to note that you must be aware of the basic requirements of ISA 402 and 3402. Although it was examined fairly recently, there's always a possibility that it could come up again, because that was examined in the March attempt, which is, well, at that point in time, not a big attempt, test all the world, not done by a lot number of students, but the attempt that we are going to sit now is December. So, well, there is a possibility that this could be examined. Any questions on outsourcing?
Can service auditors be used to assess internal controls of service organization for relying on the work?
Yes, that's what they are doing. So basically, service organization auditors are providing a report on the controls and the system of the processing of that particular outsourced activity for the user entity. And that report is being used by the auditor of the user entity.
Can you please explain the difference between these two types of reports?
Okay, I'll do that again, and for this I'll just take help from the whiteboard. So basically, the auditor of the service organization would either give a type 1 report or give a type 2 report. In a type 1 report, the service organization auditor will say, will comment on the suitability of design plus implementation of controls. So basically what would he be doing? He would be documenting the system and doing the walkthrough. Of the control system or at the service organization. However, in the type 2 report, the service organization auditor will talk about the suitability of design plus implementation plus operating effectiveness of the controls. And for this purpose, he will be doing the documentation of the system plus walkthrough plus test of controls. So this is the additional procedure that is being done in a type 2 report. So in type 1, it's basically documenting the system and doing a walkthrough. And as a result of this, you report on suitability of design and implementation. Controls are designed suitably and have been implemented. However, in a type 2 report, additionally, you are also doing test of controls. And hence, you're also commenting on the operating effectiveness of the controls. And this, of course, as compared to type 1, is giving you more comfort, more assurance with regard to the area. Now, why would I do type 2 and where would I want to do type 1? Wherever the risk is on the higher side, I would want to select type 2. And wherever the risk is on the lower side, I would be okay with a type 1 report. Other questions?
Yes, there's one from why there are 2 reports in the first place? Surely we would want to see the type 2 reports, aren't we?
Not necessarily. The reason is that type 2 is going to be more time consuming and also more costly. So there can be a situation where, for the first, sorry for that, for the first year, you may want to do type 2, but then since you've got the level of assurance that you wanted, in the next year, you may be okay with type 1, right? So it's basically low cost, less amount of time. Yes, next question.
If the service organization is not compulsory to audit, mean no auditor, then what would we do the auditor of outsourcing company?
Well, if the service organization does not have an auditor, well, then you don't have much of a choice but to go directly to the service organization and to test them. So you could do direct testing. This is just a way of, saving some time. But if this is not possible, then of course you do direct testing, either at the service organization level or at the user entity level.
If the payroll department is outsourced and after audit it was found that the payroll figures were wrong, then who will be held responsible?
Well, as an auditor of the entity, I am taking full responsibility for expressing an opinion on the truth and fairness of the financial statements. So, well, in the court of law, it will be me who will be questioned on my audit. However, if the act happens because of negligence on the part of the auditor of the service organization, then I also have a right to, well, bring litigation against them because I relied on their report. However, that does not mean that the responsibility is taken off me. The responsibility is on my shoulders because I am the auditor of the user entity and I am getting this report. However, if I relied on the auditor of the service organization and I did whatever could have been normally done to assess and review and ascertain and evaluate the work of the service organization auditor, but then there was a negligence on their part as part of the procedures that they did and did not identify something, then they will be held accountable as well. Additionally. So it's something that is a matter of a court of law to decide or justice to prevail. So for example, well, if I am found negligent and I did not evaluate the work of the service organization, of course then I will be held responsible for it.
Is there any need to check competency of service auditor?
Yes, definitely. Just like the other standards that we did, ISO 610 using the work of internal auditor and ISO 620 using the work of the expert. Also for the service organization auditor, ISO 402 requires that you make sure that the auditor is capable, competent, and qualified enough to provide the report. So basically, because you're relying on their work to a large extent, so you want to be comfortable that they are providing assurance at a level that is satisfactory to you.
Last question. Can you kindly repeat the narrative that you've written in red for type 2?
Oh, okay. So, well, for type 2, for type 1, it's documentation of the system plus walkthrough, and that results in type 1. For type 2, it's documentation of the system plus walkthrough, same as type 1, plus, additionally, test of control. So, pardon the writing, it is that bad, sorry for that, but it's test of control. So, you do test of controls, and that basically results in one additional thing in type 2, and that is operating effectiveness. So, you have for type 2 in black, suitability of design, implementation, and third, operating effectiveness. Right. So we'll now move on to reviews, which is, well, the last topic for today, and an important one. Now, review engagements are basically different from assurance engagements, and you're all aware of the fact that we also discussed that they are providing moderate assurance, which is expressed in the form of negative assurance. So there are two types of engagements that fall under reviews. So one is the ISRE, International Standard on Review Engagement, 2400, and the other is ISRE 2410. And ISRE stands for International Standard on Review Engagement. ISRE 2400 deals with all other review engagements which are not covered by ISRE 2410. And ISRE 2410 basically covers review of interim financial statements, and such a review is performed by the independent auditor of the entity. So actually, the person performing the review is the auditor, but the task that he is doing is actually a review. And the subject matter that is being the subject of review is not the annual financials, rather it is the interim financial statements. So it needs to be seen here that why is this required? Well, a review is required to be performed by the independent auditor of an entity in many jurisdictions where listed companies are subject to a Code of Corporate Governance, CCG. So as per the CCG, as per the Code of Corporate Governance, many entities that are listed in many places in the world, as per the local laws, are required, one, to have an audit of financial statements every year, but in addition, are also required to have a review of the interim financial statements, for example, of the half year, or 6 months financial statements, which is not going to be a full-fledged audit, but is going to be a review engagement. Now, what are the two primary procedures that are performed in reviews? There are two. Inquiry. Combine this with analytics. Inquiry and analytics. So these are the two basic procedures or the weapons that the auditor has. So he's not opening the documents to verify them, not doing physical inspections, for example, inspecting records. However, if there is a higher risk, the auditor may choose to have some of the other procedures as well. So, for example, recalculation, inspection, observation, reperformance could be used as well in the review engagement. However, what is primarily used is inquiry and analytics. So these are the two types of procedures that are being done. So an auditor, when he is engaged in the middle of the year, for a half-yearly review of the interim financial statements, so the auditor is still going to come again after 6 months and do the audit of the whole year. But before that, right in the middle of the year, the auditor is coming and is doing an interim review. So he's doing a review and he's inquiring and doing analytical review to identify if there's anything that is significantly substantial, strange, irregular, something that is unusual, and trying to make sure that there is nothing that comes to his attention or her attention that causes him to believe that the finances do not give a true and fair view. So the opinion that is expressed in a review engagement is known as the moderate assurance, which is expressed in the form of a negative assurance. And this opinion basically entails that nothing has come to our attention that causes us to believe that the financial statements do not give a true and fair view. So again, it is a concept of assurance that is lower than reasonable assurance. In reasonable assurance, what you were saying was that in our opinion, the financial statements give a true and fair view, which is a positive form of assurance. In negative assurance, or moderate assurance as we call them, you're saying that you have not seen that something is wrong. In other words, nothing has come to your attention that causes you to believe the financial statements do not give a true and fair view. It's just like the simple mathematical rule of minus multiplied by minus becomes plus. So negative assurance is expressed in minus is equal to plus. Nothing has come to my attention that causes me to believe that the financials do not give a true and fair view. So minus and minus results in the assurance which is known as moderate assurance, and which is of course lower than reasonable assurance. Now, moving on to the real aspect of review, which is usually tested in exams as well, for which we also have a question lined up. Other reviews. These basically include, amongst others, most commonly tested at P7 level, due diligence. And for this, we will turn to the slides that you can see in front of you. So due diligence, as per ISI 2400, the purpose of due diligence, as per the slide, is not to gain assurance over truth and fairness, but to obtain certain information in a predefined context. For example, in a transaction to purchase a company. This would include financial due diligence, operational due diligence, HR or people due diligence, IT due diligence, regulatory due diligence, and also environmental, these days, due diligence. On the financial due diligence side, you would have further two subcategories: the buy side due diligence and the sell side due diligence. So from a buy side perspective, you want to know, if I want to buy company A, what are the facts and circumstances and events that I need to be aware of in order to set the right price to buy A? In a sell side due diligence, I want to know from the practitioner, from the reviewer, if I want to sell this company, that is my company, what are the facts and circumstances and events and transactions and items that I need to be aware of in order to set a price for selling the entity. So the perspective will be different from a buy side and a sell side. In a buy side due diligence, you want to know that is there anything that would cause the price to go down? Because if I want to buy a company, I would want to buy that for as less a price as possible. So for example, I would conservatively be looking at the issues associated with the entity. For example, is there any litigation that could result in a presently recorded contingent liability being recorded as a provision or liability? Also, I would want to know if the asset values are overstated. However, the perspective when you're doing a sell side due diligence is totally different, wherein you want to know that whether, as a seller, if I'm selling my company, am I undervaluing anything? And actual value of that asset may be much higher. So, financial due diligence has the buy and the sell side, and same happens for the others as well. So, operational, HR or people, IT, regulatory, and environmental due diligence is something that is very common these days with transactions and mergers and acquisitions. The procedures that are usually used in due diligence are again the procedures that we talked about as part of reviews, which are inquiry and analytics. So you're making inquiries and you're doing analytical reviews. You're not verifying items. You're not physically inspecting things. You may want to do that if the risk is too high. However, the primary procedures that you're doing is inquiry and analytics. And this is in a predefined context. So the predefined context is that either a business is being sold or a business is being targeted for purchase. So the procedures that you would be doing would be very different from audit. Now, let's turn our attention to a question, and for this, we have 10 minutes. So just the same paper that you just opened a few minutes ago, we'll turn to September-December hybrid attempt 2015, question number 3. And we are going to read the question and make an answer plan, and for this, we will have 10 minutes. So I will discuss, okay, let's make it 12 now. Slightly more is required because it's a bit more text. So let's make it 12 minutes from now. Read and prepare an answer plan. Question 3 of September-December 2015 hybrid attempt. 12 minutes. All right, time is up, and you would have read the question and prepared an answer plan. Another 20-mark question, 6 marks out of which seems to be the easier ones to get. Describe the purpose of a due diligence assignment and compare the scope of a due diligence assignment with that of an audit of historical financial statements. Now, the key thing to write here was that how to consider here was how do you get the whole 6 marks, because these are the type of questions where you should target at least 5 marks. Yes, 5 out of the 6 that are available. And it is possible to get the 5 of the 6 marks out of the 6 that are available. Now, if you look at the marking scheme, which is on page number 27, what they want you to do is to they give you 1 mark for each description of the purpose and up to 1 mark for each point of comparison with the audit. So on the purpose, if you write that it is to basically gather information in order to reduce the risk of an investment decision that we just talked about on the buy side due diligence when I want to buy. So I want to know, right? That would give you 1 mark. Verification of management representations. Of course, management has presented their financial statements, but you want somebody independent, impartial to come and review that financial information in order for you to, when you sit on the negotiation table, to basically make an informed decision with regard to the purchase of that business. Identification and evaluation of assets and liabilities, and identification of operational concerns and synergies. Now, this is important. You may have all have mentioned about or thought about assets and liabilities being over or understated, but also is the fact that whenever 2 companies are merging or one is avoiding the other, the concept of synergy, or what are sometimes also called economies of scale, comes into play. And that is basically the value of when 2 entities merge. So lots of costs can be avoided, lots of common costs can be taken off, many people, of course, also have to be put on off the companies, and that also results in severance payments for one time, but then that results in cost savings in the future years. So that is something that could also be written over here. And assistance with acquisition planning. So you get information that helps you to plan the acquisition and strategize it in a way so that the whole process of transfer of control works smoothly. Scope will be range of sources used, of course. In an audit, it is the evidence that is available, but in the due diligence, of course, it's inquiry and analytics, and that would also include market research, for example. Levels of assurance, of course, are different. We talked about that. Moderate assurance compared with reasonable. Types of procedures are performed, yes, and forward-looking versus mainly historical. Now, that's a key difference as well with regard to scope. So, well, the audit is historical, and audit relates to historical financial information, but a due diligence is typically looking at the future. It's forward-looking in nature, so that if the 2 companies were to merge, if A was to buy B, if B were to sell its segment to D or C, what would be happening in the future? So that's what it is, future-centric. It's looking towards the future. And there is, of course, no controls testing in a due diligence engagement, whereas in an audit, an auditor may want to or may decide to test controls if they want to rely on them. Any of these points, any 6 of them, would result in you getting 6 out of the 6 marks that are available. Right, then was the next part, which was, well, the more trickier one, and that related to additional information which should be made available to assist with the valuation of intangible assets. And the other part, or within this B2, within this part B, was explain specific qualities should make particular companies, target companies management relevant to contingent liability disclosed in the facts. So now what you have to do was focus your attention only on the 2 things that have been asked. And those 2 things are the valuation of intangible asset and nothing else. Of existence, completeness, or other things, just the valuation of intangible assets. And secondly, the contingent liability that has been disclosed in the financials. So if you were to talk about other things or other areas, that will not help you get the desired level of marks. Now this is worth 14 marks, and if you turn to page 27 to look at the marking scheme, you will figure out that the 14 marks you can get by talking about the database, and the inquiries that you would want to do about them, and the license, of course. And then also talk about some of the inquiries that you would want to make with regard to the contingent liability. So in the marking scheme, which is on page 27 within the ACCA suggested solution, you can see that the database has 30th June 2015 financial statement. What was the carrying value in those financial statements? That gives you an indicator of what the value is likely to be based on historical cost, but also what the fair value might be close to. Original software purchase agreement is something that you would want to see. Why do you want that? Because you would want to see what is the life of the software, whether there are any other clauses associated with it that would impact the value right now, that would decrease it or increase that value. You may also want to see the software maintenance contract and the historic records of sales by customers, so that you know that there is no impairment in it. Because if you have this record and there are sales that are being made and there is a viable business, of course, then that means that there is limited chance of the value being decreased. Sample customer communications and sales forecast, as we talked about. On the license, you will again want to see the original purchase agreement to ascertain the cost, and the original purchase agreement again to ascertain the incremental or contingent consideration associated with this license. You'll also want to see the license terms and conditions. Are you under any obligation to pay any additional amounts in future years or right now as regular service or maintenance for this? Is there any liability arising on your part with regard to this particular license? Sales figure for new brand and forecast sales for the new brand, as we also discussed in the database part first. Then on the B2 part, in the inquiries, there's one mark available for each inquiry, recommended and adequately explained. Legal advice regarding who bears the liability. Legal advice regarding the likelihood of settlement. Again, this one now is somewhat similar to what you would do in an audit situation, because in an audit, whenever there's a legal case, you will want to write to the lawyer, and to them, of course, you would want to know from them what is going to be the likely outcome of the case. Settlement of claims since year end, how many have been settled and whether that has been done in favor or against the company. How long the faulty parts have been used for, whether there are new claims since year end after the reporting date, whether there have been any new claims, because that would increase the amount of liability that I may have to pay. Risk of other things, of course, and quality problems with other parts, because this is not the only one. There could be other parts where there might be other quality problems as well. So now the key thing here, and like with any due diligence questions, is about the additional information. So you sometimes have to really think through what has been given within the scenario and come up with a lot of other ideas and explanations that could be used as additional information. But then that is not going to give you the full marks. What you would have to also see is that you would have to describe why you need that additional information. Note the word that has been used, the requirement within the question requirement. It says, recommend with reasons the principal additional information. So when it says recommend with reasons, of course you have to not just describe what you need, but also why you need it. So which is why it is important to mention why you need the financial statements, why you need the original purchase agreement of the license software, why do you need the maintenance contract, why do you need to ask management about it, and what are the inquiries that you want to do. Again, for part B2 it says, on the inquiries, it does not say state the inquiries, it says explain the specific inquiries you would make. It's very, requirement is very specific in terms of what it wants. So if you do not write what is actually required in the question, and you start off writing about what is the due diligence, what is its purpose, things that may be covered in part A, but they would have no relevance to part B, and would not enable you to get many marks. So that is the key thing that needs to be looked into. Any questions with regard to this? Let's have a look at the question text box.
Can we say if the opinion is modified, then there is no KAM?
Okay, that's the question coming in again from on the yes. So we'll take part of that question. On this area, is there any question on the practice that we just did in due diligence? No. Okay, that's fine. So, well, that's the end of the day for now, but we have a few questions parked in related to emphasis of matter and key audit matters. So there was one from the Sun that was related to the difference between a key audit matter and an emphasis of matter. A key audit matter versus an emphasis of matter. So a key audit matter is a resolved matter communicated to the board or to those charged with governance. In auditor's judgment, it is a key audit matter. An emphasis of matter is something that auditor wants would draw attention towards. It may or may not be a key audit matter. So I gave an example, and that was that if there is a legal case going on, and the outcome of that case may result in a liability being recognized in the financial statements in the future, so the auditor may want to highlight that as an emphasis matter. However, it's just a case that is going on and that has, well, no bearing on fixed assets, inventory, loans, borrowings, payables, receivables of the entity, which are some of the key items in the financial statements. Does not impact revenue at all as well. So key audit matter is entirely different, and key audit matter is something that is significant, that in the auditor's judgment is of paramount importance and hence needs to be explained to the shareholders as a matter that was an area of key risk in the audit. The wording that would be used for a key audit matter versus an emphasis of matter would also be different. The wording that would be used in an emphasis of matter is that without qualifying our opinion, we draw attention to note X to the financials, which states that, for example, there is a case going on which could be settled either way against or in favor of the company. But that's not like a risk is written, right? A risk is written in a different way. So the key audit matter would be that, well, there's a key audit risk associated with the valuation of inventory, for example, and then how we actually resolve that risk. So that would be falling under key audit matter. Now this question that we just had, if you could just read that out loud.
Which question?
Just the one that you read.
Yeah, can we say that if the opinion is modified, then there is no KAM?
If the opinion is modified, then there is no KAM on that matter. There is a possibility that there might be 5 key audit matters, and only on one of them the opinion is modified. So on the matter on which the opinion has been modified, on that matter there will be no KAM, but other KAMs will continue to come, or other key audit matters will still be there.
Does key audit matter relate to tangible items in financial statements only? Does key audit matter relate to the financial statement only?
No, it could relate to intangible assets as well. It could relate to anything in the financial statement. So it is anything that in the auditor's judgment is of significance and takes a lot of time and needs communicated back to those chartered governments.
Okay. Can you please repeat the third one on the board in KM?
Third one.
What is the third one on the board?
Here, yeah, okay. In the auditor's judgment. So basically, key audit matter will be decided by looking at the eyes of the mind of the auditor. What in the auditor's judgment is a key audit matter, not from the perspective of the shareholder, right? Whereas in an emphasis of matter, the judgment applied is that of the auditor, but the auditor is trying to highlight that to get the attention of the reader, which is again the shareholder. So it's again slightly different in terms of perspective.
Please describe whether current ML matter may become KAM.
Yes, there is a possibility that an issue that has been highlighted in a management letter, for example, like a significant control deficiency, actually becomes a key audit matter in the future. Yes, that could happen. But not all management letter points will be key audit matters.
And if opinion is modified, then there is EOM or not?
If the opinion is modified, that means, well, EOM, emphasis of matter, does not result in opinion modification. Because you say that without qualifying our attention, we draw attention. Without qualifying our opinion, we draw attention to note X to the financial. So the report is modified, but the opinion is not modified in case of emphasis of matter paragraph.
Okay, would internal audit engagement be considered an assurance engagement or consultancy engagement?
It's a consultancy engagement. In an internal audit, it's being done internally within the company. So it's an employee of the company or a department within the company who are all employees of the company, or even if it's outsourced, people who are carrying out certain work that has been given to them by our senior executive management or the board.
For KAMs, do we have to look for the unresolved matters first?
The starting point for KAM, key audit matters, would be the matters that have been communicated to those charged with governance. So as I said, in the definition of the key audit matters, we had they are, in the auditor's professional judgment, matters of significance in the audit, and number two, they're selected from within the matters that have been communicated to those charged with governance. So you select the key audit matter from within the matters that have been communicated to those charged with governance.
Is KAM compulsory for non-listed companies?
Key audit matter is to be given for listed entities. So the new standard, of course, the key audit matter standard applies to listed entities audit report only.
Students are still struggling to understand what's written in the board.
Okay, I'll just repeat that. So on this column we have the key audit matter, KAM. On this column we have emphasis of matter, right? And I want you to highlight the difference between the two. In the emphasis of matter, the auditor wants to draw attention towards a matter. The auditor wants to draw attention towards an issue. It could be anything. And the example that I gave is a legal case. On this side, you have key audit matter, KAM. The key audit matter is a resolved matter, number one. Number two, it is communicated to those charged with governance. So it is something that has been selected from the many different items that have been communicated to those charged with governance. And number three, it is selected based on the auditor's judgment, not the shareholders or the directors or the management's judgment, but rather it is in the auditor's judgment, a key audit matter.
Okay, any more questions? What if there is mention that company is not listed, so there is a possibility that a KM para can be seen in any question?
No, the standard of key audit matters applies to only listed and public interest entities. So in a private company, of course, that would not apply. So it will not be applicable to private companies. Right. So I hope that we are done for the day. Thank you very much. And
one more question.
Oh, we have a
student. Bilal Evan, can you ask your question again? I don't know what your question is. In the meantime, Burhan has asked, does KM necessary in disclosures?
Is KAM necessary on disclosures?
In disclosures.
KAM is necessary to be included in the audit report of a listed or public interest entity. The key audit matter is part of the audit report, so it does not go into the financial statements or in the notes.
Bilal Evan, what's your question? I cannot find your question.
We'll just wait for a question. I think that is being written. Or we could take that tomorrow perhaps when we start off.
Okay, is it necessary to refer to ISA in exam?
Well, we discussed this yesterday as well. You're not expected to know the whole name of the ISA. Also, you're not expected to know the number of each ISA. However, it is good practice, and I strongly recommend that some of the major standards, the numbers at least you know. So you know that ISA 240 relates to fraud. I'm not saying that if you don't do it, you will not pass. That's not what I'm saying. But what I'm saying is that it basically creates a good impression as regards your command over the knowledge of auditing. So if you want to show the examiner that you really know the requirements of the standard and you can apply them, then that's of course something that creates a very good impression. But of course, more important than this is the fact that you relate the information from the standard to the scenario that has been given. So if you can relate it, then that is the win-win situation. That is the best situation to have. So you know the standard number and you write down the requirements related to the standard, but also then relate those requirements to the scenario in question.
Okay, here's the question from Bilal. He wants to know what is the other matter paragraph.
Other matter paragraph is about something that is not disclosed in the financial statements. So when we talked yesterday about comparatives and the first audit assignment being done by this audit firm, so they will say the three things that the prior year audit was done by another auditor and the date of the report and the type of the report. So that is another matter. So that would be classified as other matter. So anything that is not related to a disclosure in the financial statements, that will be shown in other matter paragraphs. So any other information that the auditor wants to say. So for example, an auditor produces a fresh report and wants to withdraw the previous report. So where would he put that line in the new report? He would put that in the other matter paragraph. And he would say that I hereby withdraw my previous report, which was issued prior to this subsequent event happening, and now I am issuing this new report. So basically another matter paragraph is like other, and other means anything that is not covered anywhere else, So that would be coming other category. Any other information that the auditor wants to highlight which is not related to the financial statements?
Okay, two more questions. One is from Kessler. It's not a question, it's a statement. He says, I read an article about close call regarding going concern as KAM.
Yes.
But that's the only statement.
Okay, so close call situations where the material uncertainty is there with regard to going concern. Yes, that will be a key audit matter, but because of the requirement of material uncertainty being separately required in the audit report, that will not show or appear under key audit matters. Rather, it would be shown under material uncertainty paragraph within the going concern section of the report. That is what we just saw on the audit report that I showed you as well, which is available in the handout section on the right side.
There's a question from Asghar. In review engagement, if there is something which comes to our attention, then what will be the wording of the report?
In our opinion, except for inventory, nothing has come to our attention that causes us to believe that finances do not give it to. In our opinion, except for receivables, nothing has come to our attention that causes us to believe finances do not give it. So it's going to be very similar, just the wording. In our opinion, nothing has come to our attention. You will just insert except for in that place.
From Mozambique, private companies still follow the old audit report format, yes?
They will follow the revised ISO 700 as well, but the key audit matter section and the other information section will not apply to them.
We have been tested on the structure of the audit reports. Will it be examined in future like it has been?
I can't comment on how and what is going to be examined, but I can say it is examinable. So it is something that is examinable. Whether it will or will not be examined is something that only perhaps the examiner right now amongst the whole world would know.
Let's take one more question quickly, guys, if there is any other question. We're overrunning already.
Right, so we can park some questions for tomorrow if there are any. I know that the key audit matter section is something that is new. It takes some time to absorb and digest. Think about what we've covered today and also go through again the handouts that you just saw. So that would enable you, and as I said, look at some of the key audit matter reports, the new audit reports that have been issued in the UK and in the Netherlands. So there are certain telecom and big manufacturing and other services companies based in the Netherlands and in the UK where this standard has been early adopted. So it will be a very good practice to look at some of those reports because that would give you an idea as to how the key audit matters have been drafted. But however, if there are any questions, please feel free to ask them tomorrow or day after. I shall be available to respond to any of them. Thank you very much. Have a good day and a good night. See you tomorrow.
Thank you very much, guys.